Welcome to the weekly market wrap-up. I'm Hannah Bernard. US and Canadian markets are both closed today for Good Friday, so it was a short one this week, but that doesn't mean that it was uneventful, and there's lots to cover. Let's get to it. The big three US markets rallied all week, ending up overall for the short 4 days of trading. The Dow spent most of the week rallying with only a slight stall on Thursday. The Dow gained 379 points over the week, closing Thursday at 16,408. The S&P 500 also spent the week climbing, up 49 points for the week to close at 1,864. And the NASDAQ also didn't disappoint, gaining 95 points over the 4 days to close Thursday at 4,095. Now let's turn to Canadian markets. The TSX followed the US market rally all week, posting a significant 249-point gain over the 4 days of trading to close Thursday at 14,500. The TSX Venture Exchange, however, didn't perform as well. Despite rallying after Tuesday's midday dip, it only could manage a 1-point gain over the week to close Thursday at 998. The week before Easter was quite eventful, as the biggest story was the 4-day rally that took place in the US markets this week. Driving those gains were strong earnings from banks and industrial companies, offsetting disappointing reports from technology blue chips. IBM was a miss. Shares of Big Blue sunk after reporting Wednesday its first quarter earnings plunged 21%. Quarterly revenue dipped for the 8th consecutive month, down 4% to $22.5 billion. Google also took a miss. The company's stock is down nearly 2% after its first quarter results failed to match Wall Street forecasts. Google reported an earnings per share of $6.27, down from $6.40 that was expected by analysts. SanDisk was a beat. Shares of the computer hardware maker surged 6.5% after reporting a 13% boost in first quarter revenue to $1.5 billion. The company that specializes in storage products also generated $269 million in net income, up from $166 million a year ago. Now to winners and losers and our picks for the week. The winner for this week is Weibo Corp, ticker symbol WB. Weibo Corp, China's most popular microblogging service owned by Sinacorp, IPO'd Thursday on the NASDAQ and had a great first day, with shares surging 40% after pricing its initial public offering at the low end of the market range. Weibo closed the day up 19%, settling in at $20.24. Chinese social network Weibo has been accused of being a Twitter clone. That may not be entirely accurate, but certainly Weibo would have loved to copy Twitter's 73% stock jump on its first day of trading last year. And the loser for this week is Radio Shack Corporation, ticker symbol RSH. Radio Shack shares were battered all week, reaching one-year lows and plunging nearly 17% on Thursday, following a report that talks with lenders is delaying planned store closings that were announced in March. Radio Shack had planned to close up to 1,100 stores across the US, and the retailer's credit agreements only allow it to close 200 stores without approval of its lenders. Negotiations have not gone well and have held up store closings. Also hurting Radio Shack's shares is the reportedly lower than desirable gross profit margin on the array of personal and home technology products carried by the national retailer. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. Well, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 US stocks to watch. First up on Monday is Netflix Inc. Netflix was our loser last week, and next week they release earnings with an EPS forecast of 83 cents compared to 31 cents in the prior year quarter. Out on Tuesday is McDonald's Corp with an EPS estimate of $1.23 compared to $1.26 in the prior year quarter. The Golden Arches welcomed singer Chris Daughtry and comic Wayne Brady as celebrity voices for its Voices of McDonald's singing competition being held later this year in Orlando. Finally, on Wednesday, Apple Inc. is out with an EPS estimate of $10.19, which is compared to $10.09 in the prior year quarter. Now checking in on Canadian stocks to watch next week. First up on Monday is Rogers Communications Inc. with an EPS estimate of a forecast of 72 cents, compared to 80 cents in the prior year quarter. Next out on Tuesday is Canadian Pacific Railway Limited with an EPS estimate of $1.48, compared to $1.24 in the prior year quarter. Finally, out on Thursday is OpenText Corporation with an EPS forecast of 81 cents, compared to 63 cents in the prior year quarter. 2 weeks ago, OpenText launched its Experience Suite, enabling organizations to design, develop, and deploy rich omni-channel experiences that drive customer interactions anytime, anywhere, and on any device with any content. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.